isang silanganan. Alon ng puso, sa dibdib mo'y buhay. Lupang hinilang, duyan ka ng magiting. Sa manlulupig, di ka pasisiil. Sa dagat at bundok, sa simoy at sa langit mong buhaw. May dalagang tula at awit sa paglayang pinamahal. Ang isap ng wataw at lu'y tagumpay na nagniningning. Ang bituin at araw niya kailan pa may di magniningning. Lupa ng araw ng walhating pusunta, huwag langit sa piling mo. Aming ligaya na pag may pangalit na pumatay ng dahil sa'yo.
Do health that's right for you. And no, we don't mean like this guy. We mean for you. Whether you're older, younger, bigger, smaller, thinner, leaner, we're all built differently. So how we do health should be different too. Get Pulse, the free app through PruLife UK. Our AI can give you a health assessment based on your 3D digital twin, which is created from your physical data, so you can make the best choices for you. How do you do health when you're not sure what your body's telling you? Uh-oh, you've been sneezing 24/7. Is your heart palpitating? And you, what's with the sleepless nights? Some symptoms might seem harmless, but maybe you should look it up. Not on the internet. On Pulse, the free app through PruLife UK. By answering a series of questions, our AI-powered chatbot can help you understand your symptoms better. It could be the flu, or maybe just an allergy.
There are different types of families. Families with one too many kids. Families where mommy is also daddy. Families that love in unexpected ways. Families who are always there in times of need. Families that fight for what's best. Families who can't wait to start, but they all share one thing. They care a lot. That's why AXA Healthcare Access puts your health in your hands. It grows old with you. It suits every budget and anticipates all needs. Take charge of your family's well-being with AXA Healthcare Access.
Your greatest achievements are your life's treasures, and you only want the best to protect the life you love. In this fast-changing and uncertain times, you long for security and peace of mind. CocoGen protects everything you love with love. For more than 5 decades and counting, CocoGen has been providing innovative insurance solutions and excellent services. From its small beginnings in January 1963, it has grown to become one of the strongest and most dependable non-life insurance partner of the Filipino people. In an industry with over 60 players, the company has built a solid reputation in the general insurance landscape, being one of the country's top 10 leading non-life insurance companies. CocoGen offers a wide array of quality insurance solutions designed to protect everything a Filipino values. From tangible, hard-earned assets such as your home, business, and your car, to something as priceless as oneself and one's love. With the shared goal of maintaining a culture of distinctive excellence among its management, employees, and business partners, CocoGen empowers its people to provide the best insurance solutions and be your trustworthy partner.
I fell in love with basketball at the age of 4. It just came naturally to me. By the time I got to high school, I wanted to make a name for myself. With a lot of hard work and luck, our team, the Blue Eaglets, won 3 straight championships. College was a bit different. I began to feel the pressure of winning the game. However, the support of the alumni, my teammates, our families, and the fans was just overwhelming. After college, I turned professional. Things were going my way until one day, I faced an obstacle. Being unable to play the sport that you love for 18 months, it allowed me to take a step back. It was a blessing in disguise. I felt that it made me a better player and a better person. Looking back, whatever I have achieved in my career, all these became possible because there were people who believed in me. My school, the fans, and most of all, my mom, my dad, and my family.
Good morning, everyone. Good morning. Many Filipinos consider insurance as a liability rather than a source of funds for life's unforeseen events. However, this notion has continually changed in the past years as newer insurance coverage covering individual customers with pre-existing needs or with a medical condition were introduced in the Philippines. This has resulted in increasing insurance penetration in the Philippines and a change in consumers' behavior towards purchasing an insurance policy. In light of the COVID-19 pandemic and recent calamities in the Philippines, insurance is now more necessary than ever. Filipinos have increasingly recognized the risk from a lack of security in cases of death, unforeseen accidents, and hospitalization costs from illnesses. In today's virtual forum, we will talk about the prospects of and opportunities and challenges in the insurance industry. Welcome to the 2021 Insurance Industry Outlook, hosted by the Manila Times. Now, to open the event and welcome all of us, let me introduce the President and CEO of the Manila Times, Mr. Dante Clink Ang II.
Thank you, Ray, and thank you for agreeing to be our workhorse once again in our events. First of all, let me greet our speakers today. It's on the Honorable Attorney Dennis Fua, the Commissioner of the Insurance Commission, Mr. Raul Ola, the President and Chief Executive Officer of AXA Philippines, and Mr. Michael Reliosa, the Executive Director of the Philippine Insurers and Reinsurers Association. As Ray said, insurance is a relevant topic today. If there's any concept that we are more familiar with today than we were yesterday, it is uncertainty. And of course, uncertainty is mitigated by insurance. Now, having said that, the Filipinos, should be more familiar with insurance as a concept. But again, as Ray said earlier, many view it as an investment rather than, or as an expense rather than as an investment. And that is ironic, given the fact that I recall that insurance companies were one of the first foreign investors in the Philippines. In my previous career, working with the Department of Foreign Affairs, I was fortunate to be posted in Canada. And I remember back then that one of the very first foreign investors in the Philippines were insurance companies. Sun Life and Manulife were here even before there was a proclamation of independence in the Philippine Republic. And yet, like many others, I find myself wanting to know more about insurance. As Ray said also, that penetration rate is an issue. I have heard that despite the fact that insurance companies were the first investors in the Philippines, the Philippines is underserved, and there is I hope to hear from our speakers today what is the present penetration rate of insurance, and perhaps because of our greater appreciation now, because of our experience with the pandemic, perhaps there will be more people attuned to the needs and the benefits of having an insurance policy. I'm sure you're all eager to hear from our speakers today. I know I am. But before we do so, allow me to thank our sponsors who made this event possible this morning. They are PruLife UK, AXA Philippines Incorporated, Coco Life, CocoGen Insurance, Hungry Workhorse, and of course our organizational partners, the British Chamber of Commerce of the Philippines, the French Chamber of Commerce and Industry, the Italian Chamber of Commerce in the Philippines, the Management Association of the Philippines, or MAP, the Financial Executives Institute of the Philippines, or FINEX, and the Manila Times TV. Of course, thank you to everyone who's watching this event on our social media platforms and on our website. Those who will miss this event and watching this at a later date, you may find our reports published in the Manila Times, in the print edition tomorrow, as well as in our digital edition. And I invite you to look at those and see the edited videos as well on our Manila Times channels, both on YouTube and Dailymotion. Again, good morning, everyone, and I look forward to a productive morning. Thank you. So to introduce our speaker this morning, he is Attorney Dennis Funa, Commissioner of the Insurance Commission. He was appointed by President Rodrigo Roa Duterte in December 2016. Commissioner Funa obtained his Bachelor of Law degree in San Beda College of Law and passed the bar in 1992. He took his undergraduate degree from De La Salle University. He took his secondary and primary studies at San Beda College, Manila, and St. Francis Xavier School of New York, respectively. Commissioner Funa was a 1997 scholar of the London-based International Bar Association and his biennial conference in New Delhi, India, and of the Association for Overseas Technical Scholarship in Tokyo, Japan. He served in the government in various capacities during the administration of former Fidel V. Ramos. He first served as the Special Assistant to the Appointment Secretary of President and Director and Technical Assistant to the Chief Presidential Legal Counsel under the administration of President Ramos. As the youngest presidential appointee of then President Ramos, he was appointed as the Executive Director of the Videogram Regulatory Board, now known as the Optical Media Board, then only age 28. He served as a National Officer of the Integrated Bar of the Philippines, or IBP, for more than 12 years, and his last promotion was National Director for the Bar Discipline, which investigates disbarment complaints against erring lawyers on 2007. Ladies and gentlemen, Commissioner Funa.
To all the participants, organizers, and fellow speakers, ladies and gentlemen, good morning. I would like to extend my gratitude to the Manila Times for this chance to participate in your virtual business forum and for your concern and interest in the insurance industry. I hope that today's forum will not only help us present an objective and credible industry outlook for 2021, but also inspire renewed confidence in the insurance industry. Doubtless that the COVID-19 pandemic is one of the greatest, if not the greatest challenge of our generation. If not for COVID-19, there would not be any uncertainty on the outlook for the industry. The insurance industry has been a rosy pink for the past many years. In 2013, for example, in terms of assets, it hit the trillion mark, and there has not been any looking back. The pandemic placed a question mark on a lot of things, including on insurance. Is insurance still relevant today? Are insurance companies paying up their obligations? Are people interested in securing their future, their properties? Allow me to answer these questions by telling you about some of the measures we have done in the past year in order to cope with our unprecedented challenge, particularly in the areas of digitalization, market benefits, and policy interventions, and financial inclusion. On digital transformation, in recent years, technology and digital innovations, popularly known as insurtech, introduced innovations in the insurance industry. Insurtech has been around for years and is continuously evolving. But the recent pandemic served as a catalyst to accelerate drastically the digitalization of the Commission and of the insurance industry. For the Insurance Commission, we have converted most of our existing manual operations into streamlined internet-based processes for fast, easy, and safe transactions among our regulated entities. Some of these processes are as follows. First, the Commission Appointment Reservation System, or iCare system, which is an in-house developed system that manages the appointments of Insurance Commission walk-in clients to ensure that daily face-to-face transactions are lessened and client waiting times are reduced. Second, the Insurance Commission Electronic Application and Certification System, or EACS, which accepts certification requests and prints certificates of surety bonds and CART policies for non-life insurance companies. Third, the Insurance Commission Electronic Payment System, which integrates a third-party payment gateway in the system as an alternative to face-to-face payments. Fourth, the online agent's computerized examination, which is a web-based examination taken by aspiring agents as a prerequisite for obtaining a license. Fifth, the e-reclamo system, which is an electronic complaints management system for the handling of various complaints from our stakeholders. Six, the eSiguro BOT, which is an in-house developed web-based application that serves as an online portal where the insuring public can lodge their queries and complaints. 7. Online submission of products and forms for approval, which essentially adopts a cloud system for the submission of products, forms, and other supporting documents that need approval from the Commission. 8. The QR-coded customer satisfaction survey, which is an online satisfaction survey to ensure a high level of public service by the Commission's personnel. In the future, even after this pandemic, we expect that technology will continue to evolve, providing greater efficiency to the way our processes are conducted. On the matter of consumer benefits through policy interventions, mindful of the difficulties brought about by the pandemic, the Insurance Commission worked doubly hard to craft and issue policy interventions that would directly help the insuring public. Because of these policies and with the support and cooperation of our regulated entities, the pandemic became an opportunity for us to show our care for our insuring public. Life insurance companies launch initiatives granting additional benefits or free insurance coverage to customers affected by COVID-19. Examples of such benefits provided to customers for free are benefits to cover COVID-19 death, diagnosis, hospitalization, and even COVID-19 tests and adverse effects of COVID-19 vaccines. Some companies also waive pandemic coverage exclusions, which are common exclusions in health insurance contracts. The Insurance Commission supported the efficient implementation of these initiatives by relaxing the approval requirements through Circular Number 2020-19. Recognizing the gravity and overall impact of COVID-19, the Commission issued a circular urging its regulated entities to provide a more lenient policy regarding payment of premiums. This eases the policyholder's financial burden and ensures continuous insurance coverage. Insurance companies tapped into the online insurance market to distribute their products and offer a more seamless customer experience to the insuring public. Several insurance companies launched their products through their own e-commerce platforms, online marketplaces such as Shopee and Lazada, and mobile wallet apps such as GCash. The Insurance Commission institutionalized remote selling as a permanent mode of selling insurance products. Life insurance companies have since used information and communication technologies such as teleconferencing, video conferencing, audio conferencing, and other remote communication technologies to sell their products. This helps in keeping both agents and their customers safe. Some life insurance companies bundled their life insurance products with products of HMOs to provide a more comprehensive protection for life and health. Given that health has become a primary concern for everyone these days, these bundled products make it easier for customers to avail of insurance products that are suitable to their holistic needs. On the matter of microinsurance growth and innovation, amidst these uncertain times, the Insurance Commission and our partner industries remain committed in continuing our financial inclusion efforts. As of the end of 2020, lives covered by microinsurance have surpassed 50 million mark, with the exact figure rounding off to 50.35 million. True, this is but a meager increase from the 48 million insured lives as of the end of 2019. However, given the restrictions we experienced the previous year, such growth is very respectable. Further, despite the lockdowns and other restrictions, we continue to find ways to reach out to our microinsurance target markets. We conducted a webinar regarding personal accident insurance, comprehensive motor vehicle insurance, and compulsory third-party liability insurance to food delivery riders, and participated as resource speakers in various online financial literacy efforts. Let me now proceed to the industry performance for the first quarter of this year. Regardless of everything I mentioned, the true yardstick of the industry's resilience is its performance. And here, I have the numbers. This data gathered from the unaudited quarterly reports on selected financial statistics submitted by life and non-life insurance companies and mutual benefit associations as of the first quarter of 2021. Based on said report, the life and non-life companies and MBAs total income grew by 45.84% year-on-year, from 8.13 billion in first quarter of 2020 to 11.85 billion in the same period of this year. Moreover, their total premiums earned increased by 27.81% from 78 billion to almost 100 billion. Their investments likewise grew by 16.52% from 1.43 trillion to 1.67 trillion pesos. As to assets, the insurers and MBAs collective assets grew by 15% from 1.65 trillion pesos in the first quarter of last year to 1.89 trillion in the first quarter of this year. Separately, the life, non-life, and MBA sectors fared well too. For the life sector, the total accumulated assets of the life sector grew by 17.38% from 1.27 trillion pesos to 1.49 trillion pesos. The total premium income likewise grew by 36.62% from 60.89 billion to 83.2 billion pesos. This increase is attributed to the 47.77% increase in variable life insurance premiums earned during the same period. Sales from single premium products posted a remarkable increase of 131.67%, while renewal premiums rose by 21.53%. Traditional life insurance premiums grew by a modest 6.78%, buoyed by a 9.76% increase in single premiums and 13% increase in renewal premiums. The life sector posted a 9.4 billion pesos total net income, which is an increase of 38% compared to the previous year's 6.8 billion pesos. Aside from the increases in premium income, this growth in total net income results from a 124% increase in capital gains income, a 9.7% increase in net investments income, and a decrease in other expenses account by 23.57%. For the non-life industry sector, the industry's total net income in the first quarter of 2021, this year, grew year on year by an impressive 626% from 164 million pesos to 1.19 billion pesos. Actually, the current amount is even higher than the pre-pandemic figure of 1.04 billion back in the first quarter of 2019. Also, the sector's total capital gains yielded another staggering growth of 293%, from 17 million pesos to 68 million pesos. Total gross investment income likewise grew by 15% despite decreases in real estate income earned, interest income earned, and other income accounts. The non-life sector's gross premiums written, net premiums written, and premiums earned declined by 7.95%, 6%, and 10% respectively. Still, the engineering, casualty, and health insurance lines, which comprise almost 20% of the total net premiums written, showed significant increases of 103%, 29%, and 15% year on year. The sector's assets grew by 5% from 269 billion to 283 billion pesos, with the industry's cash and invested assets growing by 5% and other assets growing by 54%. The sector's total investments grew by 9.21% and its net worth by 7.39%. For the mutual benefit associations, the industry's total assets, total liabilities, and total fund balance, total guarantee fund, total investments, total contributions or premiums, total benefit payments, and total net surplus grew across the board by 11.94%, 13.46%, 9.76%, 1.97%, 10.92%, 11.53%, 37%, and 7% respectively. This is growth across the board. MBA's aggregate assets are now at 118 billion pesos and has total contributions amounting to 3.18 billion pesos. These numbers are significant because MBAs are the biggest support for our micro insurance program. As of end December 2020, MBAs take up 57% or 29 million of the total insured lives and 57% or 4.46 billion pesos of the total premium production for micro insurance products. What then is the industry outlook for the rest of the year? Like all other industries, the insurance industry felt the impact of the pandemic. Earlier, I enumerated a lot of gains, but to be honest, the crisis also pushed us into a lot of setbacks in the past year. The thing is, we have a lot of things going for us. We were ready for the digital world. We were sincere in providing quality service to our policyholders and in ensuring that commitments to our policyholders are met despite the difficulties we all face. We did not forget our policyholders, especially our low-income customers and MBA members, but continued to look out for them. And importantly, through all these challenges and endeavors, we, the Insurance Commission, regulator and policymaker, enjoy the trust and abiding support and cooperation of our regulated entities, making navigation through these abnormal times seem almost like normal. And because of this, I am confident enough to declare that the industry outlook for 2021 is very hopeful. Judging by the performance of our insurers and mutual benefit associations in the first quarter of the year, and anchored in the realities of a still uncertain situation, 2021 will not likely bring sterling production. Nevertheless, the insurance business will remain strong, vibrant, and reliable, ably and actively securing life, properties, and health in these very vulnerable times. When the going gets tough, the insurance will keep our people going. This is what we are here for, to bring relief and assistance when contingencies strike, and we will not renege on that. But that said, please take all efforts to be safe. With that, ladies and gentlemen, I thank you and wish you all a good day ahead.
Thank you, Insurance Commissioner Dennis Huna. Truly impressive growth of the insurance industry despite the setbacks from the pandemic. Well, he said the insurance industry outlook for 2021 is very hopeful. Let's hear it from the industry players with our next speakers. So our next speaker has a total of over 19 years of work experience spread over FMCG industry for 4 years and 3 months, and insurance for over 15 years. He has been he was promoted to be the president and CEO of AXA Philippines after working with the organization for over 6 years as a MANCOM or Management Committee member and member of the board of AXA Philippines. As a CEO, he is steering AXA Philippines to transform and innovate, which includes consolidating AXA's existing life insurance and the newly acquired non-life insurance business into one. He served as Chief Operation Officer for AXA Philippines from May 2015 to March 2016 and identified to strategically drive the organization towards being more customer-centric with key focus on digital transformation. He concurrently holds the Chief Agency Officer role, driving sales strategies to achieve the desired growth in sales targets of AXA Philippines. He holds an MBA from the Center of Management Development and a Bachelor of Science at St. Stephen's College, New Delhi University. Let's all welcome the President and CEO of AXA Philippines, Mr. Rahul Ora.
Thank you very much for the welcome, Ray. Am I audible?
Yes, we can hear you.
Okay, sounds very good. So a very good morning to all our participants, and thank you very much to the Manila Times for organizing this particular event and allowing us to speak on this extremely important topic of the insurance industry outlook. So also thank you for Mr. Dante Ang for launching this particular event, and of course to our Honorable Commissioner Attorney Funa for the introductory speech. And congratulations, sir, for the wonderful performance of the industry in the first quarter of 2021. Just goes to show that under your leadership and guidance, the industry has really indeed been very resilient and contributory to the society and to the Philippines, in these very tough times. So when we talk about the insurance industry outlook, I am taking this opportunity to talk about a certain few trends which are important, I believe, to the customers and to the overall society in the Philippines. We all know that the pandemic and the changes that are happening around us have really changed practically everything that we had taken for granted, the way we live, the way we operate, and hence it would be very difficult to summarize, what are those leading trends in the insurance industry into the future. But I identified the top three, which I would want to speak upon, because I believe that these three trends are most important and relevant from a customer standpoint. Next slide, please. Next slide. So the first and the foremost trend that I would want to talk about is responsible investing. I know at this point in time, our attention is all, overtaken by the pandemic that we are, facing, COVID, and of course, for the rightful reasons. But as we talk, the human race is today facing even a bigger challenge, and a challenge of climate change. And hence, the climate change and the risks to sustainability that comes in because of that are trends which I believe the insurance industry will be seen acting on in the months and the years to come. AXA in its own way has created our own strategy to respond to this particular issue. But when we talk about responsible investing, there are two aspects which are extremely important, which the insurance industry will be seen in the years to come acting upon. The first one is the role of the insurance industry in terms of sustainability, on how does the industry act in order to help the customers sustain the risks or the threats which come along with the impact of climate change. And the other one is how insurance industry can play a role in impacting, on these, on certain trends which will be helpful or which will enable the society to move into an environment where we have lesser risk around climate. Next slide, please. So why is it, first of all, important for us in the Philippines to talk about climate change, to talk about, the risks of climate change on sustainability? If you look at the year of 2018, and when there was a ranking of all the countries which were most impacted by climate change, Philippines, not surprisingly, came in at the number 2. So we are at the risk of being impacted the most. We are one of the most vulnerable countries when it comes to climate change, and hence the importance to act on an urgent basis. 5 out of 10 strongest tropical cyclones in world history made landfalls in the Philippines. 9 out of the most destructive typhoons in the Philippines happened in the last 10 years. So it's a situation, it's a problem which we cannot move away from or turn our face on. because this is staring us right in front of us, and it's a situation and a problem that we are facing in reality. Next slide, please. What is the role that the insurance companies are playing against as far as sustainability is concerned? These climate change impacts our lives or our businesses on a daily basis. And insurance has a very important role across all these three legs of life, health, and P&C insurance in allowing our customers to deal with the threats coming from climate change and ensure that they are able to keep their livelihoods and their lives sustainable. First, on the life insurance part, life insurance helps our customers to protect income and helps in economic recovery of the family for an untimely demise of a member. Health insurance provides for medical expenses to avoid burdensome household debts from medical bills. And of course, the P&C insurance helps us in protecting our properties, our businesses, our livelihoods in case of economic losses in the events of climate change or catastrophes that we deal almost on a yearly basis. Next slide, please. Beyond this, AXA Philippines or AXA Worldwide has committed ourselves, we've committed ourselves in ensuring that we have integrated sustainability into our business strategies. The way we act or we play a role in ensuring that we are providing assistance to our customers and also playing a role in ensuring that the society at large is benefited or protected from these climate changes. We, first of all, as an insurance player, are restricting underwriting risks of products or underwriting risks of industries, which are, of course, acting in not in favor of climate change. What are these kind of industries? These are kind of industries such as coal, oil, and a few others, for example, tobacco. So we as an insurer have moved away from underwriting these risks so that we are able to act in a responsible fashion to only underwrite the risks of organizations and industries which are in compliance to the need of action on avoiding climate change. The other aspect is thought leadership. We are, of course, participating in a lot of public and private awareness forums such as these, so as to ensure that we are able to continue to promote the urgency which is associated with this threat which is being faced by all of us. On our own operations, we are trying to minimize on a daily basis how our operations impact directly on environmental footprint, and we ensure that we are taking all the actions that are needed to reduce our own carbon emissions and usage of water and paper. And of course, we as an insurance company also invest our own assets and the assets of our customers. And we are ensuring that we invest in green assets, and of course that our investing activity is impacting in a way which is reducing the reduction of the investments into the carbon intensive industries such as coal and oil sands that I talked about, and tobacco. Next slide, please. We have not only put together a strategy, but also at AXA, we have what we call as AXA for Progress Index. We try to evaluate our progress that we are making on these commitments around climate change. We are driven by our purpose, which is to act for human progress by protecting what matters. But this progress index that we're talking about, it basically is focused on the three important pillars of us acting as an insurer, us acting as an exemplary company and leading the actions around climate change, and third, as I said, as an investor. And we've kept certain concrete targets for ourselves at AXA globally so that we are able to measure the progress that we are making around this progress index or around our actions around climate change. So first of all, on our targets, we have said that we would want to decrease the carbon footprint of AXA's general accounts by 20% by 2025. We want to reach 25 billion euro investments in green assets by 2023. As far as insurer is concerned, or our role as insurer is concerned, we are acting or we are playing an important part in bringing insurance to the vulnerable populations. Historically, we've always been focused on products and propositions which are centered around high net worth or mass affluent customers. But we believe that with the advent of technology, there is so much of opportunity for insurance companies like us to bring these insurance products and propositions to the vulnerable population. We are also launching more and more green insurance products. And as far as our action as an insurer is concerned, or as a company by ourselves is concerned, we want to ensure that we are educating our own employees to begin with on the impact of climate change and what is it that we could do to transform this. We are taking a role to be transformation leaders or transformative leaders who are playing a role in educating the people and educating the society on topics like these, and also acting in a way which is in conducive or in connection to our overall strategy of acting as a catalyst in the field of climate change. We also want to achieve carbon neutrality by 2025 by reducing the overall CO2 emissions by 20% and offsetting the residual emissions. Next slide, please. Commissioner Puna also talked very passionately about digital transformation, and this is the second trend that I wanted to talk about. Truly, digital transformation will ensure that the insurance outlook going forward will continue to be very, very promising. Digital transformation is not only impacting our lives as far as insurance is concerned, but it is impacting our daily lives, the way we operate, the way we deal with each other, whether it's socially, economically, or commercially. Everything is being impacted by digital transformation, and insurance is no exception to that. Next slide, please. So, what are the main usages of technology, or what are the main impacts that we see that technology is making in the insurance industry? The first and the foremost is artificial intelligence. Artificial intelligence has revolutionized the insurance industry by helping the insurance providers deliver more efficient, effective, and personalized products. And how are we able to do it? It's because AI enables us to get a lot of data, which allows us to tailor-made products according to the risk profiles of customers, which was never available to insurance companies in the past. So AI-based underwriting solutions is really the trend that we will see happening in the future, which will ensure that we are able to underwrite risks which are specific to individual customers, and it allows us to be more efficient in the way we price our products. Next slide, please. Looking at all these trends and, of course, incorporating AI in our own strategy, we first of all came up with what we call in AXA is a social media command center. Why? Because it allows us to now track where our customers are, what our customers are talking about. And in order for us to be relevant to our customers, we wanted to strengthen our own capabilities in social media. Second, we have also transformed ourselves in how we interact with our customers, in how we allow our customers to deal with us, or how we allow our customers to request for all their service requirements are concerned. And that in a big way has transformed. We launched it to begin with what we call as AXA Web, where we introduced a lot of self-service options for our customers, which allows them to deal with insurance companies with a lot of convenience, ease, and at the tip of their fingertips. We also then moved to launching all these services in our own app, which we call as Emma. It is an award-winning app, as we were awarded by the Insurance Institute for this year to be the best app in the country, and we are extremely proud of that. But more importantly, this basically brought all the customer service requirements and customers' requests on their mobile phones, on their gadgets, which of course all customers are carrying almost everywhere, anytime and everywhere. We introduced all the important service requests of our customers on this app and allowing our customers to reach out to us 24/7, anytime, anywhere, wherever they are. Next slide, please. We call this particular app Emma, and we are extremely proud of what we've been able to achieve through Emma and how we have allowed access to our customers through this particular app as Emma. Emma is the humanized version of our app. And again, most importantly, apart from all the service requests that I talked about, Emma also allows us as an organization to deal and to interact with our customers in a very relevant way. Commissioner Funa also talked about education. And yes, we believe that education is a consistent gap in the insurance industry where a lot of our customers need to be educated more about the importance and the relevance of our insurance products. And we are using Emma to build upon that particular gap, to close that gap by ensuring that we are able to reach out to our customers and provide them with a lot of information, and we are able to communicate to them on a frequent basis so that we are able to educate them about our products, our propositions, and the relevance and importance of insurance in their lives. And that is important strategy of ours when we strive to not only being a pair of claims to our customers, but ensure that we are becoming an encouraging partner for our customers in their life journeys. Next slide, please. Commissioner Funa also talked about health, and this is also something which we are very passionate about. And we are again using Emma to educate our customers on the relevance of health products and also their financial needs. If COVID has taught us one thing, and that is to be able to be prepared for any eventualities of the future. We can, COVID has taught us that we can't take anything for granted as far as our lives are concerned. And that is where insurance products come into and play a very important role. It helps the customers to plan for their future so that they're better prepared for all the planned events of their life and also for these kind of uncertain ups and downs which might be unexpected and coming their way. And we have seen a lot of interest in our customers on topics of health, the concerns that they have on their own health and the health of their loved ones. And we are using Emma to bring our messages and our, the message, the education around health and the concerns. And we are addressing the concerns of our customers using our digital platforms, which is Emma. Next, segueing into health, again, the third, and again, a very, very important trend that we see emerging in the insurance industry in the years to come. Next slide, please. There is a high renewed interest in health protection. And let me first talk about why and how, and what is the extent of this particular gap that we talk about in the insurance industry. Next slide. If you look at this particular slide and see what are the various sources of health funding in the Philippines, you will see that 48%, the pink part of the pie chart, 48% of the expenses are currently today borne by the Filipinos, which are out-of-pocket expenses. The national government is able to contribute to about 15% of the health expense in the Philippines. Social insurance, 24%. The HMO industry, which has been there for the longest time, contributes to about 11%. And the private insurance, which have just started their venture into health products, is currently contributing to only 2% of the expense being reimbursed by the insurance companies. So what does that tell us is that all these sources of support for our customers and our fellow Filipinos only contribute to 52% of the health expenses. Still, a very significant part of the health expenses is coming from out of pocket, which is something that we see needs to change for the future. And that's a role which the HMO and the private insurance industry has to play in a very significant way. And we will see this trend emerging in the years to come. Next slide, please. What has AXA Philippines doing? What we are doing in Philippines is not only launching new products so that we are able to introduce relevant products to our customers on a regular basis. But we are also trying to create an ecosystem of health so that our customers are supported through their health needs, through their healthcare journeys completely and at their convenience. We have tied up with partners offering our customers teleconsultation, a service which has become extremely relevant in times of COVID. We've seen a lot of customers not being able to go to hospitals or not wanting to go into the hospitals and because of the fear of COVID. And hence a service where you can reach out to a doctor at the convenience of your house through your gadgets is what is called teleconsultation. And we've seen this trend emerging in a big way, not only in the European countries, but now in countries like Philippines because of the challenges that COVID had brought us. We are also taking a lot of interest in educating our customers and informing them about what should they be doing around prevention and wellness. And we have tied up with Philippine Cancer Society to bring a lot of awareness to our customers on cancer. We've tied up with other partners like AID so that we can bring medical services at the convenience of the home of our customers. We've tied up with our HMO partners called Awega, which is also what Commissioner Funa was talking about, to ensure that we are able to bring access to our customers of a wide range of hospitals to ensure that their their hospitalization journeys are taken care of and are extremely convenient and stress-free for our customers. We are launching various products so that we are able to reach out to every specific need of our customers. We realize that our customers have different needs depending on what life stage they are at, depending on the budget that they have for themselves. So our endeavor for the last 6 to 7 years has been to be an insurance company which offers the widest range of medical products to our customers so that whatever your need is, whatever the budget that you're looking at, you are able to buy a health product and ensure that you're financially prepared for any health emergency for yourself and for your loved ones. And here, next slide, please. I would also like to take this opportunity to introduce our latest product called AXA Healthcare Access. We saw and we believe that there is a huge gap in providing to our customers a product which is as comprehensive as healthcare access so that every hospitalization need of the customers is taken care of. We saw that a lot of customers have HMO products, have other health products, but their coverages are not enough to be taken to ensure that they and their loved ones are taken care of in case of any emergencies or of critical illness. And again, COVID made us realize that some of these expenses could really easily run into millions when it comes to the critical illnesses. And hence, we launched what we call as AXA Healthcare Product, Healthcare Access, which is probably one of the most comprehensive health protection products today in the industry. And of course, is flexible and affordable to our customers. Flexible because the customer can tailor-made it based on their need, based on whether they have an HMO or they have an insurance from another insurance company. They can tailor-make this product to complement their existing insurance products that they already have so that they're also able to make it affordable and ensure that they have a comprehensive coverage for themselves. Next slide, please. The 5 most important benefits of this product. First, as I said, it's comprehensive. It does not only cover our customers for critical illnesses, but it covers customers for any kind of hospitalization expenses and full coverage, and also ensure that they're able to get this coverage cashless. As I mentioned earlier, we have tied up with our HMO partner to ensure that we bring access to the widest range of hospital network for our customers so that their hospitalization journeys are cashless and convenient. Second, we have benefits beyond retirement. A lot of our HMO-linked products, which are employer benefit products, end with employment. When the company, when our employment with our companies end, when we reach that stage of retirement, we find ourselves most vulnerable with all these critical illnesses, but at the same time, without any coverage. But our healthcare access covers our customers till the age of 75 years and also allows a fund which is available to them post 75 so that they can access these funds for their healthcare needs even beyond 75. The third is we have a widest range of plans. So it's flexible. It depends on what is it that your need is, what is it that your priority is, and hence you can choose a plan which suits your individual requirements. And hence we have put together a widest range of plan types so that it allows every customer to find a suitable product for themselves which suits their budget. Fourth, we have covered pandemic diseases. Again, Commissioner Puna was talking about how some of the insurance products have exclusions of pandemic diseases, but understanding the need of our customers currently and also prospectively in the future, we have ensured that our healthcare access covers our customers for all kind of current or future pandemic diseases. And fifth, and the most important one, is that we also allow access 24/7 to our customers of teleconsultation. You don't have to wait for the hospitals to open. You don't have to rush to the emergency. If there is a medical need, you can first reach out to our 24/7 health teleconsultation line and reach out to a specialist or a doctor to ensure that you are taken care of immediately through this teleconsultation facility. So these are the 5 most important features of our healthcare access, which is a product which we are extremely proud of. And we see ourselves that, playing a more active role in the years to come to ensure that we are one of the most trusted health partners of our customers in the Philippines. Next slide, please. The product has 2 very important variants, which is Healthcare Access Prime and Healthcare Access Lite. The biggest difference between the two is the Healthcare Access Prime allows you to deal with inpatient and outpatient care both, whereas Healthcare Access Lite is focused more on inpatient care and emergency care so that we are able to ensure that you have the funds available in case of any inpatient reason, irrespective of whether it's critical illness or any kind of reason for hospitalization. Next slide. So thank you very much for inviting me for this particular talk. And just to summarize the 3 trends that I talked about, which will ensure that insurance companies will continue to play an extremely important role in the lives of our customers and Philippine society as a whole, is our role in sustainability and impacting climate change. Second, of course, embracing the digital technologies and ensuring that we are able to bring all relevant products and services in a very convenient way and are able to touch our customer at every touch point with convenience and care. And that is what we call as digitalization or digital enablement of our business. And the third, our role in being our healthcare provider or a health partner for our customers for their lifetime. Thank you very much.
Thank you, Mr. Rahul Hora, President and CEO of AXA Philippines. Indeed, insurers have a critical role in sustainability. Mr. Hora mentioned 3 aspects: life, health, and owned. And AXA Philippines has integrated sustainability in its business strategies. Our next speaker recently retired as the President and Chief Operating Officer of Fortune General Insurance Corporation. He, however, continues to serve as its consultant and sits on the board of various other corporations, notable of which is City State Savings Bank, a listed company where he chairs the Trust Committee. Following his regional stint as chairman of the ASEAN Insurance Council from 2015 to 2016, he holds the chairmanship of the Education Committee of the ASEAN Insurance Council, or AIC, composed of top insurance industry leaders in the Southeast Asian region. Concurrently, our speaker is fondly called, he's fondly called as Mitch. He has been very active in serving the insurance industry through his involvement with various entities in various capacities, notable of which is the Philippine Insurers and Reinsurers Association, or PIRA, the umbrella organization of all non-life insurance companies in the country. He was chairman in 2010 and 2015, and now it's executive director. He is also concurrently its Public Relations Committee Chairman and the designated industry spokesperson. He is also a regular lecturer of the Insurance Institute for Asia and the Pacific, and recently was elected to its board for the years 2021 and 2023. He holds an AB Economics degree from the Ateneo de Manila University. Let's all welcome the Executive Director of the Philippine Insurers and Reinsurers Association, Mr. Michael Reliosa.
Thank you, Ray. Thank you very much. If you could allow me to share my screen. I hope you can see it.
Yes.
Yeah, thank you very much. Well, good morning to everyone, and thank you for having me. On behalf of PIRA, or the Philippine Insurers and Reinsurance Association, I would like to thank the Manila Times for this opportunity to present the latest updates on the non-life insurance sector and to show you where the industry is headed in this peculiar time in history. I entitled this presentation, Philippine Non-Life Insurance, Resilient, Responsive, and Relevant in Changing Times. Before I begin, let me first introduce to you our industry. Our non-life insurance industry is more than a century old. It began during the latter part of the Spanish colonial period, developed during the American occupation, survived the Second World War, and grew by leaps and bounds amidst the years of political and economic upheavals that our country has experienced over the years. Our industry was born from crisis: fires, typhoons, floods, volcanic eruption, war, earthquakes, maritime disasters, deadly road mishaps, you name it, we survived it all. And it continues to grow and become stronger through difficult times. They say a ship is harbor, or a ship in harbor is safe. But that isn't what ships are built for. The same goes for the insurance industry. This industry is made for times like these. As our country plunged into recession due to the world's longest and hardest lockdown, our economy almost ground to a halt. Yet despite this, and as the Commissioner has said earlier, the non-life insurance industry managed to register a phenomenal 67% growth in net income. This, despite the fact that 9 out of 10 non-life insurance companies saw their premium production go down by 10, 20, or even 30%. Based on unaudited figures from the Insurance Commission, the industry's gross premiums written for 2020 collectively went down by 16% to 75.9 billion pesos from 90.1 billion pesos in 2019. If you compare this to the figures that the Commissioner showed earlier, please note that the figures given by the Commissioner were for the entire industry. My figures pertains only to the general or non-life sector. The same was seen for net premiums written, which is the total premiums retained by the industry, which dropped by 15% to 40.7 billion pesos from 47.7 billion pesos the previous year. This drop in premium production was caused by a decline in car sales, which led to a 16% drop in car insurance sales, decline in shipping activities, which led to a 12% dip in marine insurance, and the reduced mobility of people, which led to a whopping 49% drop in health, accident, engineering, microinsurance, surety, general liability, and professional liability insurance, migrant worker insurance, and other miscellaneous insurances. One line of business that saw growth in 2020 was fire insurance, accounting for 32.3% of the premiums, registering an 11% increase from the 2019 figure. It would probably be confusing for ordinary people to understand how insurance companies generated a jump in net income despite suffering massive decline in sales for most lines of their business. The simplest answer here would be the income increase was due to the decline in losses paid by insurance companies. Simply put, less cars on the road resulted to less accidents, and less accidents meant less insurance claims. Collectively, the industry's incurred losses went down by more than 20% to 16.7 billion pesos. This then led to an impressive 41% loss ratio for 2020, which was significantly lower than the 47.8% the year before. Loss ratio is the result when you divide the total claims paid by insurance companies to the total premiums that they earn. A lower loss ratio results to a higher profit margin. For 2020, the profit margin of the industry was at 11.4%, a big jump from the 6.2% the year before. These numbers would show you that our industry, which is in the business of pricing and accepting risks, has a prudent mindset. And this is what makes it more resilient. Our industry is also standing on solid ground. Under the insurance code's capitalization requirement, I'm happy to note that our industry is now more than adequately capitalized. The current size of the business it writes, compared to that of our 9 other ASEAN neighbors, already show that we lead the pack. Our member companies continued building their capitalization despite the decline in sales in 2020. As of December, 48 companies have already registered more than 1 billion pesos in net worth, while 4 companies have reached the 900 million peso mark, while 3 others are in the vicinity of 700 million pesos. These billion peso companies could no longer be classified as small, and they are all standing on solid ground financially. Their higher net worth makes them more resilient to economic upheavals such as the current recession that we are experiencing. We hope our government would see this as enough capitalization already and would consider the industry's proposal to keep the capitalization target at the 900 million peso mark and no longer the 1.3 billion originally set for December 2022. Doing this would enable the companies to invest their money more into their operations and digitalization rather than just parking it to satisfy the requirements of law. But more than resilience, I would like to talk more about our country's or our industry's responsiveness. The insurance industry is probably the only industry that comes to your aid when we experience a tragedy or a loss. And amidst these challenging times, the non-life insurance industry has responded and continues to respond to the needs of the insuring public, whether it be in extending due dates of insurance premiums to relaxing the requirements of claims, which we did during the pandemic. There are even companies who paid for COVID-related claims ex gratia, as pandemics are usually excluded in products like travel insurance, events cancellation insurance, and the like. Along with this, I would like to take this opportunity to express our industry's gratitude to our regulator, the Insurance Commission, for being considerate in providing regulatory relief as companies transitioned to the new normal of doing business. Just like other industries, the non-life insurance sector found it a challenge to pivot from a work-from-home arrangement when the first lockdown was declared. The challenge was not only how to get systems into the cloud, but also how to enable employees to do their work remotely. The ones who were able to pivot the fastest were the multinational companies as well as the larger domestic ones, who apparently had business continuity plans already in place to address situations such as this. Their laptop-armed employees transitioned effortlessly to a remote work setup. Yet some found it difficult to adjust at first. One company I know had to ask their employees to bring home their desktops so that they can use it at home. One also made use of motorcycle delivery services to bring insurance policies to clients and collect payments or deliver checks for claims. The best thing in all of these is that it accelerated companies' adoption of digital technologies. Prior to 2020, we had a conference on InsurTech, or the technologies that would change the insurance business. At that time, companies were still taking their sweet time to study such technologies. But when COVID hit, they had no choice but to digitalize. Our part in PIRA, we were responsive to the needs of our members. We fostered real-time communication and collaboration with the IC, as well as thought leaders of other industries like banking, fintech, and cybersecurity. We wanted to be ahead of the curve, so to speak. We wanted to provide solutions to our members' problems even before they asked for them. This is the reason why we had a string of webinars, and we wanted to arm our members with all the knowledge they need, as well as opportunities for them to interact with one another. PIRA is all about networking and collaboration. As you know, we are better together. Now I could say all companies have adjusted to the new normal. Many are even taking advantage of opportunities to launch technology-aided products. These companies do not want this crisis to go to waste. Finally, let me talk about relevance. The one thing this pandemic has shown us is that no matter how prepared we are, no matter how forward-looking we may be, there are things we can never fully control or anticipate. Hence, the need for insurance. More than ever, people need insurance to manage the things that are beyond their control. People have realized that their businesses, no matter the size, can never be immune to the financial shocks brought about by a series of unfortunate events. In 2020, for example, we did not only have COVID, we also had a Taal volcano eruption, the African swine flu, and typhoons Raleigh and Ulysses, which hit us like a 1-2 punch in the face. Our industry continues to make itself relevant by being proactive. One major project that the industry is pursuing is the creation of a Philippine Catastrophe Insurance Facility, or PCIF. Being the most disaster-prone country in the world, the Philippines badly needs this facility that would increase the industry's resilience and make catastrophe insurance more accessible to Filipinos. Without this facility, catastrophe insurance coverage would always be out of the reach of most of our countrymen. We are also working for a major shift to a free market system when it comes to insurance rates. For the longest time, three lines of business, namely motor insurance, fire insurance, and surety, were governed by tariff rates. But based on a referendum that we did about 3 months ago, insurance companies have decided to push for the eventual removal of tariff for car insurance, then to allow a file and use system or tariff for the fire insurance line, and to have a flexible tariff system for surety. This is a work in progress. And this is a major industry development and will require a lot of work in terms of data gathering on the part of PIRA. But we see this as a big step toward a more relevant and data-driven industry that addresses the needs of the insurance or the insuring public. And finally, our industry is going through a major overhaul of its accounting system via the soon-to-be implemented global IFRS 17, or the International Financial Reporting Standard 17, which insurance companies all over the world would be required to use. This would standardize the industry's accounting practice to a greater degree and make companies more transparent, both to regulators, the insuring public, and all stakeholders. Once implemented, this new system stands to make the industry more transparent and therefore more trustworthy. And that is probably what will make our industry more resilient, responsive, and relevant. When everybody can trust that the industry can deliver on its promise. After all, insurance is not just a piece of paper, it is a contract, and it is a promise. And it stands on the mutual trust between the people who buy insurance and those who sell it. Trust that if the unfortunate thing written on the contract happens, then the contract will deliver as it promised. When that trust increases, then we can be assured that we can withstand any challenge that may come our way. So thank you for listening, and I'll be very happy to answer any questions that the people may have. Thank you.
Thank you, Mr. Michael Reliosa, so Executive Director of the Philippine Insurers and Reinsurers Association, or PIRA. No? So interestingly, no, the industry experienced growth because of the lower loss ratio in 2020. And PIRA is making the non-life insurance industry more resilient, responsive, and relevant in these challenging times. We will move on to our Q&A. So let me welcome again Mr. Rahul Hora from AXA Philippines and Mr. Michael Reliosa. And to join me is the CEO, President and CEO of the Manila Times, Mr. Dante Clink-Ang. So Clink.
Thank you, Ray. So let me put on my old hat as a reporter and ask questions this morning. I'm glad to see that, at least based on the report by Commissioner Vuna and Mr. Reliosa, that the insurance sector seems to be doing well despite the pandemic, which is, of course, not the same thing we can say for many, many sectors of the economy these days. But I wanted to ask Mr. Hora and Mr. Reliosa, are there nuances to that rosy outlook? I know, for example, Mr. Reliosa said that there was a decrease in the number of takers in car insurance because, perhaps because of the work from home and the quarantine. So the growth that you were saying earlier, the 67% increase in net income came from something else. So I was wondering if there were nuances in that growth. I know the total picture looks good, but I was hoping if you can share with us maybe the parts of the sector that maybe deserve attention from policymakers. So maybe we can start with Mr. Hora.
Yes, Mr. Dante. The nuances have been primarily around the inability of our distributors to meet our customers. A significant part of our life insurance products are sold face to face.
Right.
And even if we have been with the help of the regulator, we've made our distributors, they're allowed, and there were quick policies which were rolled out, which allows them to interact with the customers digitally. But there is not, there are still a section of customers who would want to meet the distributors face to face.
Right.
That generates trust.
They want to shake hands,
course,
right?
Exactly. They want to know who their person is. So I think that quality of communication between the customers and distributors has been one of the largest nuances, and I think that has really impacted, our sales, especially in the year of 2020. And it also took a little while for some of our distributors to adapt themselves to the new way of working.
Mr. Riosa, you mentioned car insurance as, perhaps I would call it the losers, but, are there others that are in trouble that, policymakers should be paying attention to?
Well, yes, thank you very much, Mr. Ang. As a matter of fact, car insurance is one of the biggest contributors into the pie. So more than 50% of the premiums for the non-life insurance industry comes from the motor sector. So, that was a big negative for us. And the other classes of insurance, as I mentioned earlier, it was only the fire insurance that experienced an increase in uptake, while all other classes of insurance did suffer some loss. Well, just taking off from what Mr. Oro mentioned, yes, the non-life sector also was selling online, or our agency force were trying to meet their clients online. It's a good thing now that a majority of the population are getting used to, talking to chatbots or talking to people online, that perhaps for the non-life industry would be easier, because our products are a lot simpler than, say, a life product, where you have to explain a lot of the different nuances and all that. For a motor car, it's simple. For fire, it would be simple as well. So it was easier for us to sell off-the-rack products online.
I see. Very interesting. You mentioned also another interesting thing, the Philippine Catastrophe Insurance Facility. Fascinating concept. Maybe could you share more about us? And I'd like to ask that from Mr. Ora as well. I was wondering, since you mentioned that 48% of the health expenses are out of pocket, I'm wondering if the government also needs to set up a facility for health insurance, so that there will be more takers. But Mr. Reyosa, could you please expound on the concept first?
Yes. Well, what we're talking about when we talk about PCIF are the perils of earthquake, typhoon, and flood.
Right.
And as you know, the Philippines is the bowling alley of all the typhoons that occur in the Western Pacific. We usually get hit. Not to mention that we are situated along the Pacific Rim of Fire. So this area would be seismically very active as compared to other parts of the world. Having said that, currently, what our member companies do, or the individual insurance companies, is they do write this type of insurance, but then they usually cede it abroad to the reinsurers.
I see.
Most, if not all, are seeded abroad. Now, the idea behind the PCIF is to be able to pool this locally. So before we get to seed it abroad, we saturate the capacity of the local industry to write this type of insurance. And then another thing that is very important, an important effect of the PCIF would be, it would be an opportunity for us to correct our rates. You know, the CAT rates in the Philippines, or catastrophe rates in the Philippines, haven't been reviewed in decades. And we are now trying to find out what the correct rate would be. And the PCIF would help us in doing this because we have to, run our experiences through models and all that. It's an opportunity for us to correct the rates, to pool our capacity together so that we can saturate the local market before seeding it abroad, and thereby make it more available for people who may need it. There are a lot of other positives to it. One which is not readily, one which the local person or the person on the street would not immediately realize. But let me explain. For example, you are an insurance company and you write your normal portfolio business. Usually you would be getting risks in the urban areas and not in the riskier areas. Or the other way around, you may be writing, unfortunately, in the riskier areas. But if you pool all these things into the facility, it would even out the peaks and the valleys and make it less volatile. Therefore, you have a better portfolio. The whole idea of this pool is that you seed to the pool and the pool then seeds back to you. And the one that is seeded back to you is more homogeneous. It's a better looking portfolio. So hopefully a combination of all that would make it better for the insuring public.
So I'm sorry for the ignorant question here. So what is the government intervention to set up a fund? Is that what the seed funding?
Well, yes,
okay.
Part of the PCIF would really to be set up a reserve.
Okay.
And well, the Insurance Commission is helping us set this up by creating the regulatory environment that could enable it to work.
I see. And then the Insurance Commission will be the one to manage this reserve?
Well, that's one thing that the current technical working group is working on. We are still finding out the best way to go forward. We're
how much
put the pieces together.
Right. How much funding has been, the estimate needed to set up this facility?
We're still early in the game, sir, and we're still trying to ascertain this.
Interesting.
So as soon as it's available, we'll let you know.
Very interesting. Mr. Holler, catastrophes are not different from the ones experienced by families and individuals. It seems like there could be some application for the health insurance here as well. But I'm speaking as a layman. Is that a correct observation, or would you like to weigh in, or is there any initiative to set up something similar for the health side of the insurance sector?
So I think, Mr. Ang, there are a lot of opportunities and a very long way to go as far as health insurance is concerned. The data that I showed, which is 48%, is just one aspect of it. It's the financial aspect of being able to meet the expenses, and how do you meet the expenses? We don't even have access to data on what percentage of the population couldn't access the healthcare system because of lack of resources. That's one. So, of course, in my opinion, going forward, like we have launched a lot of initiatives on the PPP side, on the infrastructure side, there has to be a good, combination and a work together of the government and the private sector so that, we can enable the customers to be provided with good healthcare services. And for me, the UHC law, which was, signed by President Duterte, the Universal Healthcare Bill in February of 2019 was a great, was a great confirmation that the government wants to play a very active role in that aspect. And I would see that going forward, more and more collaboration will happen between the private and the public sector. One of the challenges that the health sector in the Philippines is also facing is the lack of manpower, the resources. And we will see that becoming more and more worse, going forward. A lot of intense, when I say intense, I mean, high on the people, that kind of sector will have to go on to digital. So, so that we can reserve the healthcare resources for more, highly intensive or, critical illness kind of care. and take away the manpower intensive healthcare to digitalization, so that, and that's where I would say teleconsultation is a very big change that is coming forward, because if you're resorting to teleconsultation, then there is lesser pressure on the hospital network for those simple primary care services. So I think for me, as I said, there is a lot that needs to be done, and a very active participation between public and private sector would be the answer. Otherwise, the burden will be too much on the public sector or on the government to take upon that whole challenge.
Right. Mr. Arora, when you say public-private partnership, are you thinking along the lines, or is anyone thinking along the lines of maybe the government subsidizing part of the private insurance cost? Is that something that's being thought of, or is there some other aspect of public-private partnership that you're thinking of?
No, for me, I think the first thing that has happened is that the IC, with the blessings of Commissioner Puna, has allowed the insurance companies to operate in that space.
Okay.
And that itself, if you go back to the data, it has allowed 2% of the expenses to be currently taken care of by the insurance companies. But I think there is a lot of work that can happen more on that aspect, so that it allows the life insurance companies, or even, for example, the PNC companies, to get into the health sector and join forces with HMO, right? Because HMO is primarily today playing in the sector of employer-employee benefit. The other is that in some of the countries abroad, we've seen the government allowing tax incentives, for customers to invest or to buy health products, so that the premium that they pay is there is a tax rebate. You don't pay tax on that. So it allows a behavior from the customers to invest or to buy insurance products, so that they can take care of the financial expense which comes with. So there are a lot of these, opportunities. And I believe the government has opened up a lot of conversation and dialogue on this. And there are more and more opportunities which will come, which we can unearth, where the government and private sector can play together. Interesting.
You were mentioning earlier the HMOs. You said that in your presentation that 11% of the health funding comes from HMOs. What is the trend there? I mean, because as I said earlier, the pandemic has hit many sectors of the economy. Is there concern that share will diminish, and then maybe how can the government step in and try to do something about that?
No, I wouldn't see that sector diminishing. I would say actually there are two opposing forces at this point in time. Currently, the headwinds that most of the corporates are facing is, of course, the business impact of COVID. And employee benefit or the HMO sector, the cost of that whole benefit is borne by the corporate, because it's the company who pays the insurance, premium for coverage of their employees. And, a lot of times when business comes under pressure, these are the kind of costs which most companies want to control, or want to reduce, so that they are able to keep their businesses afloat. So a lot of businesses, especially the small sector, will face those headwinds at this point of time because of COVID and because of their, increased costs or reduction in the business, and hence squeeze of the margins. But the tailwind is that a lot of employees are becoming more and more conscious of this, and are putting those expectation, to their employers that take care of me, So benefits like these are becoming a very integral part of the employer proposition, which earlier was only all around, compensation or other benefits. But the health benefits is becoming a very big expectation. So I think when COVID goes away and when the business bounces back, I think a lot of corporates will appreciate the importance of, investing in HMOs and buying more benefits for their employees. So that sector will continue to grow. And all the HMO companies have also started investing in backward integration to also control the cost associated with these benefits, So I believe the whole sector, the pie will expand. And I think the most important data point here is also that health inflation, the health cost inflation is higher than normal inflation. So health expenses and health costs will increase at a much rapid pace, And I was talking about the climate impact. Almost 70% of the diseases which the human race has faced over the last couple of decades are all associated because the humans have come in more closer contact with wildlife, which is again linked to your deforestation and all those things. So all the trends are pointing towards increased medical expenses. And hence, I think every part of this, the contributors or the players who are playing a role in this will have to kind of step up to be able to meet that ever increasing gap.
Before I want to go back to Mr. Reyosa, let me just ask you one more thing about education, which you mentioned in your presentation. You said that it's an important component in the viability of the sector, and of course for the insured themselves. But what do you think is the greatest challenge, or the perhaps the greatest myth about insurance that you find that you need to address it, you need to overcome it in order to benefit the entire sector? What has been the few points that you find they're most challenging? And I'll ask the same question to Mr. Reyosa afterwards.
I think, first of all, it's culturally, I think Filipinos are always driven by immediate gratification. If there is some disposable income, they would rather spend it on certain gadgets, shopping, eating out. So these kind of instant gratification, means take priority or take precedence on using that money to, buy a health insurance and that's where I think education is extremely important. We need to reach out to our fellow Filipinos and ensuring that they are being educated and the concept of savings is being brought in, and it's a culture change which might take a lot of effort, but I think we need to make it, we need to start on it, and we need to make a lot of effort around it. I think the second is also the availability of products, and that's where I was talking about how the Insurance Commission or Commissioner Funa has played a very important role in allowing more and more insurance companies to play in that sector. When competition increases, then the benefit goes to the customer. Most of the insurance companies and HMOs will now develop products in competition with each other, which are going to be more and more customer friendly. So hopefully driving, if not the prices down, but, being more competitive, or there'll be more options available to the customers so that they can really tailor make the products to suit their needs, and they don't end up being forced to buy a off the rack kind of a product, So competition always, in a lot of cases and most frequent ends up benefiting the customer. And I think that's one thing which we will see a big trend evolving in the future.
And innovation as well. I notice you have your healthcare access. That seems to be an innovation. Very appropriate for these days, yeah.
And I think we did that because we wanted to stay ahead of our competitors. So that's exactly the point that I was saying. And for me, the digital the digital enhancement, enablement of every customer journey is going to be extremely important. I think digital innovation can help a lot in education. Media is stepping in. I mean, thanks to Manila Times, for you having done this particular session, which allows us to educate our customers,
We have a insurance column as well, a weekly insurance column, if you haven't seen that. But I think our columns are meant not for the ordinary people, but for policymakers. We may have to rethink some of that later on. But Mr. Reyosa, I think your problem is compounded, right? You're not only educating people about insurance, but you're also concerned about reinsurance, which fewer people know about. What are some of your hurdles in making people aware not only of insurance but also of reinsurance?
Well, I know the reinsurance part is really very important for the man on the street because reinsurance is merely insurance of insurance. So what the man on the street should worry about is the primary insurance or the insurance part. And the government is working very closely with the private sector, especially on the topic of financial inclusivity. And financial inclusivity means making financial products, one of which is insurance, available to the common man on the street or the tindero in the palenque or, you know, the person in the street, the mom and pop shops, so on, which is more than 80% of the economy of the Philippines depends on SMEs. Now, in that financial inclusivity thing, insurance is a very important part of that. And we are working closely with, right now, the agencies that are acting on it would be the BSP, the Bangko Sentral, and the DOH, and the Insurance Commission as well. And there are a lot of activities ongoing that plan to bring financial inclusivity, insurance included, down to the grassroots. So they have different activities already in place, and the insurance industry is working with them to make that a reality. One example, of course, would be once a year, the Bangko Sentral has this convention for financial inclusivity, and the people who usually attend this would be teachers, students from the provinces, SMEs, etc. So they have some sort of a trade fair, a show, where all these products and different things can be explained to them. It's an interactive thing, and the different financial sectors are part of that. So insurance is, we have a booth. We also contribute speakers and resources to make that a reality. Another thing that we're doing in the association is we do have PIRA TV. It's on YouTube. It's a PIRA channel. And it aims to demystify insurance for the man on the street, because sometimes a lot of people find insurance very technical, but they do have real questions like, I paid for this, how come I'm only getting paid back this amount?
I see.
Why is there a difference? So it's explained to them like what's deductibles and what's the coverage all about. So we have different versions for different classes of insurance. So this is already available. It's PIRA TV, and we also try to get ourselves involved with the different sectors, with other sectors, to try to spread the gospel of insurance.
Interesting, very interesting. We might have to talk again offline because my mind is racing on a number of possible collaborations we can have. We have a Manila Times channel on social media, but not only on YouTube and Dailymotion, but also on Live, which is a mobile phone application that will soon be available to cable channels in the provinces. But let me ask you, I'm running out of time, so let me ask one last question for you and for Mr. Ora, and this has to do with your comment on the capitalization requirement. You're asking for a freeze at the moment, or a suspension on the incremental increase as required by law. Could you comment on the impact that may have? And that I wanted to ask the same question for Mr. Ora, because related to that, you said that it would be better to have more competition, and I was wondering if the increase in the capital requirements would somehow impact on competition, if it will instead bring about more consolidation and fewer competitors in the market. Mr. Reliosa?
Well, if we compare ourselves to our neighbors in the ASEAN, or the ASEAN 9, excluding us, we are already the highest capitalized in the region. Now, if you're going to compare the size of our premium volume, it's less than our neighbors. So at the moment, what we're trying to say to the regulators is that we're more than adequately capitalized for the size of business that we are writing. Having said that, a lot of our members already have met that mark. I think I only mentioned just about less than a handful that haven't met it. But having said that, if we kept it at the 900 mark, then a lot of our capital is free to do the things that we need to do,
Right.
such as digitalizing ourselves,
Right.
or equipping ourselves for the digital market.
Invest in your businesses. Yes.
And yes, the return on investment on insurance historically is very low. So it would be an advantage if we put our money elsewhere.
Mm-hmm. Interesting. Mr. Aura, do you have a position? I know it's probably not a concern for AXA Life. But you did mention competition earlier, but maybe within that context.
Yes. No, I think for us and for AXA Philippines, both for our life business and our PNC business, capitalization is not an issue because we do follow a lot of other AXA global standards, which allows us to be highly capitalized much more than
required,
the regulatory requirements. But you make a good point. I think capitalization or the increase would be a challenge for PNC. And I think for me, the GI industry or the PNC industry, whatever you terminology use, there are a lot of players which will find it extremely difficult because of the reasons that Mr. Elias just mentioned. And I would say, if that is the stand then of the government, then probably give the companies more time so that they are able to. I think timing was also a point of concern because that increase has happened over 2 tranches in a period of 3 years each. Which makes and especially in the last couple of years, the business has been a bit challenging because of all the evolving trends. And also with the incidents of all the kind of calamities which is happening now in the Philippines, it just makes the business of PNC even more challenging from a profitability standpoint. And we aren't seeing the premiums hardening, which I would have wanted in some ways. So a lot of these factors are actually going in the direction where I also personally believe and support that more time could be given to the PNC players, on this capitalization for sure. But as far as AXA Philippines is concerned, for us, it doesn't really matter for.
All right. Well, gentlemen, thank you very much for your time. I have more questions, but I think I might have to reserve them for the next occasion. And I have to hand it back now to Ray because my colleagues are telling me that they want to have lunch. Ray?
Thank you, Klink. Those are interesting, questions. So, but I have, let me get this opportunity to ask the last question. So, the insurance industry is data-driven, and technology and AI has the particular, potential to make risk evaluation more granular and precise. Can you give us a peek into the near future? What do we expect? That the insurance industry will adopt as technology to help, in underwriting, in claims, and so on. Let's start with Mr. Reliosa.
Okay. One example I could think of is in motor insurance. Right now, the way we underwrite motor is ancient. We look at the make, model, and age of the car. And that has very little to do with the risks that are attendant to using a car. But now technology would allow us to underwrite it in a totally different way. For example, let's use telematics as an example. It's this gadget wherein you plug it into the car. It's like a black box of an airline or an aircraft where it tells you how the car is used, how it's driven, how it's maintained, and all that. So if you use it in a safer way, if you maintain your vehicle correctly, then obviously the risk would be lower for accidents. And then you can then charge the appropriate premium for this. Now, it's even better now. There was a time when telematics, you still had to plug the thing into the computer box of your car, and it usually invalidates the warranty of your car. But now you don't even have to plug the thing. You can actually use your own cell phones, but you have to keep it on while you're driving. See, so technology is getting better, and the insurance industry should catch up and use that technology to be able to get more granular information that would redound to the benefit of the insuring public.
Interesting. Mr. Hora, what's your perspective here?
No, first of all, I like to build upon what Mr. Elias is saying. Absolutely correct. And I think that's not too much, in the distant future. I think we will see some of these technologies coming into motor insurance in next year if everything goes by plan. The other aspect, I think, where AI will play a very, very significant role is health. And I've been sharing about health very passionately over the last, couple of hours. But I believe that, health overall shouldn't be seen as just, one interaction with the customer and the insurance company where you just pay the claims for the expenses that the customer has incurred in hospitalization and get out of it. I think it's companies like us, like AXA Philippines, is trying to build a whole ecosystem, and AI plays a very important role for us to understand consumer behavior. What aspects of health is a customer interested in? What does he look at? We provide a lot of education material on our digital assets, like our app that I talked about, Emma. But how is the customer using it, and which profile of customers, which segment of customers is getting attracted to what? Those kinds of insights are available to us only through AI, and it helps us to design more products. It helps us to design information and interactions which our customers find more and more relevant, and it helps us to be more targeted. Earlier it used to be one size fits all kind of an approach by an insurance company, but we can now segment our approaches, segment our propositions, and reach out to those customer segments for whom those propositions are relevant. So a lot of exciting, opportunities ahead for all of us, using technology and AI, which I would see being highly applicable in the health sector as well as the motor sector, as Mr. Eliosa mentioned earlier.
Interesting. With that, so we would like to thank our speakers, Mr. Rahul Hora, President and CEO of AXA Philippines, and Mr. Michael Reliosa, Executive Director of PIRA. So the industry outlook, insurance industry outlook for 2021 is indeed very hopeful, as according to the commissioner. Industry players and the regulatory agency are stepping up to address the challenges presented by these times. So thank you again to our speakers, panelists, and also our sponsors for making this interesting forum a reality. So this has been Ray Lungtu, founder and CEO of Hungry Workhorse and business columnist for the Manila Times. Have a great day ahead.
Thank you.
Thank you. Thank you very much.
Thank you, everyone. Thank you.
Mitch, baka
do health that's right for you. And no, we don't mean like this guy. We mean for you. Whether you're older, younger, bigger, smaller, thinner, leaner, we're all built differently. So how we do health should be different too. Get Pulse, the free app through PruLife UK. Our AI can give you a health assessment based on your 3D digital twin, which is created from your physical data, so you can make the best choices for you. How do you do health when you're not sure what your body's telling you? Uh-oh, you've been sneezing 24/7. Is your heart palpitating? And you, what's with the sleepless nights? Some symptoms might seem harmless, but maybe you should look it up. Not on the internet. On Pulse, the free app through PruLife UK. By answering a series of questions, our AI-powered chatbot can help you understand your symptoms better. It could be the flu, or maybe just an allergy.
There are different types of families. Families with one too many kids. Families where mommy is also daddy. Families that love in unexpected ways. Families who are always there in times of need. Families that fight for what's best. Families who can't wait to start, but they all share one thing. They care a lot. That's why AXA Healthcare Access puts your health in your hands. It grows old with you. It suits every budget and anticipates all needs. Take charge of your family's well-being with AXA Healthcare Access.
Your greatest achievements are your life's treasures, and you only want the best to protect the life you love. In this fast-changing and uncertain times, you long for security and peace of mind. CocoGen protects everything you love with love. For more than 5 decades and counting, CocoGen has been providing innovative insurance solutions and excellent services. From its small beginnings in January 1963, it has grown to become one of the strongest and most dependable non-life insurance partner of the Filipino people. In an industry with over 60 players, the company has built a solid reputation in the general insurance landscape, being one of the country's top 10 leading non-life insurance companies. CocoGen offers a wide array of quality insurance solutions designed to protect everything a Filipino values, from tangible hard-earned assets such as your home, business, and your car, to something as priceless as oneself and one's love. With the shared goal of maintaining a culture of distinctive excellence among its management, employees, and business partners, CocoGen empowers its people to provide the best insurance solutions and be your trustworthy partner.
I fell in love with basketball at the age of 4. It just came naturally to me. By the time I got to high school, I wanted to make a name for myself. With a lot of hard work and luck, our team, the Blue Eaglets, won 3 straight championships. College was a bit different. I began to feel the pressure of winning the game. However, the support of the alumni, my teammates, our families, and the fans was just overwhelming. After college, I turned professional. Things were going my way until one day, I faced an obstacle. Being unable to play the sport that you love for 18 months, it allowed me to take a step back. It was a blessing in disguise. I felt that it made me a better player and a better person. Looking back, whatever I have achieved in my career, all these became possible because there were people who believed in me. My school, the fans, and most of all, my mom, my dad, and my family.